Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I'm Hiral Dadia. One stock that is in focus is Skipper, which is up almost 26% in the last five trading sessions. And the company has garnered an order worth almost 1,135 crores for design, supply, and construction of new transmission line projects for Power Grid Corporation of India. Joining us on the show today is Sharan Bansal, Director at Skipper Limited, to discuss more about the order as well as what the pipeline looks like going ahead. Sharan, good afternoon and welcome to the show.
Good afternoon, Hira.
Firstly, let me wish you congratulations on the order win.
Thank you. Thank you so much.
Sharan, my first question coming to you on this one is overall, if you could help us understand the details of the order, the kind of timelines we are going to work with.
Sure. So the orders are part of the 700 crores out of this 1100 crores is coming from Power Grid Corporation, and that is for design, engineering, and construction of three transmission lines. The balance 435 crores come from export orders, which come from geographies like Latin America, North Africa, particularly Egypt and Middle East. So in terms of the timelines, we are expecting the execution to take place within the next 1.5 years or so.
Okay. So out of the 1135 crores, how much revenue will be recognized by the company in FY24 itself?
It is difficult to say specifically order-wise because our order inflow even last year has been very healthy. The last financial year, FY23, we had a total order inflow of approximately 4,000 crores. And now we have started this year off on a good note with 1,100 crores of orders coming in the first quarter itself. So yes, with this, the current closing order book of the company is approximately 5,000 plus crores. So the execution of this will be over 1.5 to 2 years time. And obviously, because of the strong order book, we are expecting a jump up in our revenue. We're projecting a 25% CAGR growth in our revenue over the next 3 years.
Right. So, Sharan, as you mentioned, we had ended, the company had ended 31st March with an order book of around 4,551 crores. To that, we're seeing an addition of the existing order that you just mentioned about. From there on, how is the bid pipeline looking like? Because even at the end of the fourth quarter, the bid pipeline looked extremely healthy.
You're right. The bidding pipeline continues to remain very healthy. There are a lot of opportunities, particularly because of the investment in power transmission projects around the globe, thanks to the addition of renewable power. More and more countries are adding more renewable power to their power mix, and that is fueling the growth of power transmission business. So we are seeing a healthy growth. In fact, we are pleasantly surprised now to start, witness the revival of growth demand in India again after some time. Last 4-5 years, the demand in India has been lackluster. But now with this current orders of 700 crores from Power Grid coming in, we do expect more and more orders to come in from the domestic market also in this year. So I think overall it's a good time for companies in the power transmission and distribution segment.
Right. So overall, as you mentioned about the bid pipeline as well, what percentage of it is focused towards the domestic market and what percentage is towards the international markets?
For the last few years, we have been more focused on the international market. So that is reflected in the bidding pipeline. 6,500 crores approximately is the international bidding pipeline as of now. Roughly 35 to 4,000 crores is the domestic bidding pipeline. So yes, that's been our focus. However, particularly last year, we have had significant projects coming in the domestic market thanks to the large BSNL order that we secured. It was a single order of 2,500 crores itself, which we secured in December of 2022. So because of that, our overall order book, there's a slight skew towards domestic right now. It's about 70% domestic and 30% exports. But I'd say that from the new order inflows, we can expect a 60-40 breakup. 60% on domestic and 40% on export is what you should expect from the company.
Right. So if you have to break it up between the two verticals that we have, or three, for that matter, engineering, infrastructure, as well as polymer. Which of the three businesses will have a higher focus on international, and which of the businesses out of the three will have a higher focus on the domestic market?
Very well. Engineering products are the segment in which we are exporting. So that is where you will find the entire focus of international marketing and export order inflows. We do not do any infrastructure projects outside India, so we don't have any business for that vertical outside India. Nor do we export anything on the polymer products outside India as of now. The exports are very, very negligible. So you can expect the bulk of the export growth to be coming in from the engineering product segment only.
Okay. And overall, when you're talking about the water EPC business as well, I think this is the first order that you've already got worth almost 100 odd crores for Jal Jeevan mission projects. What is the kind of execution timelines for the same?
These projects are also fast-track projects. We expect bulk of the execution of this to happen within the year itself. So yes, and we are excited to take more and more such projects as part of the Jal Jeevan mission project.
Right. So if you have to look at the private sector versus the government sector, how is that breakup looking like?
In terms of order inflows, we have a fair distribution between the government and the private, because a lot of our business comes in from the EPC contractors, which come in the private customers category. Of course, the other half, we get business directly from the government utilities where we participate in the tenders ourselves. So I say that overall in our order book, there is a fair mix between the two.
Right. And how does the margin profile this change between the two, between the private and the government?
Between those two, we don't see much of a margin difference. However, for exports, we do see improved margins. Export margins typically are 2 to 3% better than domestic margins.
Right. So if we are, if the company is looking at getting almost 60% of the revenues from the export business, what's the delta in terms of improvement that you can expect from a margin profile perspective?
Good question. Last year, we have delivered a good improvement in our operating EBITDA levels. Our operating EBITDA levels have grown from 8% in FY22 to approximately 11% or in FY23. Now, with the strength of these orders and more orders coming in from the export segment, and overall with the improvement in demand, we do feel that the operating EBITDA levels have further margin and headroom to grow. So yes, we will certainly be expecting better and better margins from the company in the coming quarters.
Right. And overall, if you see, if you have to look at the expansion in terms of the international business as well, what are the geographies that you are focusing on?
We have traditionally been very strong in the developing geographies, particularly Latin America and I'd say Africa. Now, currently, we are seeing good demand coming in from Middle East and also markets such as Australia. These are the markets where we are getting good demand from, good orders from right now in the current last year and this year. In going forward, we are seeing good traction in the developed markets, particularly markets such as, of course, Australia and US and Canada as well. So I think that would be the target, to get more and more business from the developed geographies, apart from the developing markets, which continue to do well.
Right. Another question that I have for you, Sharan, is to play on the railway story. Now, clearly, the railway sector as a whole is seeing some strong orders that the government has been floating, and there is much in the pipeline with regards to construction of new stations, redevelopment of stations, and you do have a segment with regards to railway structures. How big a business is that currently, and do you see that scaling up as well with the kind of orders that the government is tendering out?
Railways has certainly been an interesting opportunity for the industry in the last few years. The government has been making a lot of investments in railway electrification. Presently, we are also seeing the government doing a lot of ordering for wagons, and they have released a large number of order to wagon players. So our interest in the railway segment is in three areas. One is, of course, the railway structures which you mentioned, which going towards railway electrification projects. The other is also we are producing a lot of structural items for the which go into the wagon industry. And the third is where we do the EPC construction, turnkey EPC construction of the railway tracks itself, railway electrification of the tracks. So I'd say all the three segments are interesting opportunities. In terms of overall share in our revenue, maybe they are not that large. Perhaps overall railways count for less than 10% of our revenue mix. However, it is an interesting, continues to be an interesting opportunity for the company in the coming years.
Right. So are we saying that you're not looking to actually bid because the Amrit Bharat station scheme has almost recognized 1,275 stations for redevelopment within the next 5 years. So is that something which is of no interest to the company, or I mean, how are you looking at that?
I'd say definitely all railway projects are of interest, whether it's the Amrit Bharat project or whether it's the Kavach project, which the government, that also is a very ambitious project of the government for particularly focusing on the signaling. I'd say that that will probably see more importance now in the aftermath of the Orissa tragedy, which we saw recently. Definitely, railways, like I mentioned, continues to be an interesting opportunity for the company. However, our bulk of our revenues as of now are being driven from the power transmission segment and the telecom segment. And I'd see that probably will be the trend in the coming years as well.
Right. And Sharan, in terms of the polymer segment as well, what's the ambition in terms of scaling up that business? If you're looking at the next 3 years, where do you see that?
Good question. Polymer business is a very strong focus area for the company. We have been doing well. Our brand has been getting more and more recognition in the polymer market with overall our distribution reach improving. We have launched a national ad campaign recently with MS Dhoni, and that has just been launched about 2 to 3 months ago. It has been performing very well, and we're getting a good response from that. In terms of ambition, I'd say that with the present top line of 400 crores, we can expect that to touch about 1,000 crores in the next 2 to 3 years of time.
Right. So that's with regards to the various segments of business as well. Thank you, Sharan, so much for speaking to us at BQ Prime. A good story in the making is what it looks like from the kind of order book and the bid pipeline that we are staring at as well. Thank you for joining us. Stay safe and speak to you soon again.